Welcome back to the Deep Dive, where we plunge into complex topics and emerge with clarity and, dare I say, truly surprising insights. Today, we're navigating a piece of the U.S. tax puzzle that for many feels like a closely guarded secret, the Individual Taxpayer Identification Number, or ITIN. If you're not a U.S. citizen or permanent resident but find yourself needing to interact with the American tax system, well, this deep dive is custom-made for you. Our mission today is to transform what often looks like an impenetrable government document, specifically Form W-7, the application for an ITI, and its often intimidating instructions into a clear step-by-step guide. We want to empower you to understand exactly who needs an ITI, why it's absolutely essential for compliance, and critically, how to apply for or renew one effectively.
And perhaps most importantly, we're going to eliminate how an ITIN isn't just about fulfilling an obligation. It can actually open doors to specific, valuable tax benefits. Our goal is to ensure you don't miss out on opportunities to optimize your tax situation, potentially saving you significant amounts. Our authoritative guide today comes directly from the Internal Revenue Service, Form W-7 itself and its comprehensive instructions, both revised in December 2024. Let's really get into the weeds.
So let's peel back the first layer. When most people hear taxpayer identification number, their minds immediately jump to a Social Security number, or SSN. But the ITIN is, well, it's a whole different thing, isn't it? Expert, what's the fundamental distinction, and why is that distinction so crucial?
That's the perfect starting point because it's where so much of the confusion begins. An ITIN is a 9-digit number issued by the IRS solely for U.S. federal tax purposes. That phrase, for U.S. federal tax purposes only, is really the cornerstone of its definition. It's specifically for individuals who are required to have a U.S. taxpayer identification number, but who don't have, and importantly are not eligible to get, a Social Security number.
Right.
Think of it as the IRS's way of making sure everyone who has a tax obligation or maybe wants to claim a tax benefit can be properly identified. Even if they can't get an SSN, it's like a bridge, connecting non-SSN holders to the U.S. tax system.
Yeah.
Without it, the IRS simply can't process your tax returns.
So if I'm understanding correctly, it's strictly for tax identification. It's not a green card. It's definitely not a work permit. And it doesn't give you any immigration benefits. Is that distinction always clear to people?
You've hit the nail on the head, and it's a critical point where, honestly, many misunderstandings persist. We cannot emphasize this enough. An ITN is not an SSN. This means it absolutely does not entitle you to Social Security benefits. It doesn't change your immigration status one bit. And, most certainly, it does not grant you the right to work in the United States. It is purely an administrative number for tax processing.
Oh?
For instance, if you're a student here on, say, an F1 visa, you might need an ITIN to report scholarship income or maybe claim certain education benefits, but that ITIN has zero bearing on your right to work. Any attempt to use it for employment authorization or as some kind of immigration document would be a really serious misstep.
That's an incredibly important clarification. So what if someone is actually eligible for an SSN? Should they even be looking at Form W-7? And it sounds like trying to get an ITN when you're SSN eligible would be a pretty common mistake.
Oh, it's one of the biggest pitfalls, actually. The rule is crystal clear. You should never submit Form W-7 if you already have an SSN or if you're eligible to get one. The IRS will just reject your application outright. If you've applied for an SSN and you're waiting to hear back, you should definitely hold off on the ITIN application.
Right. Wait for the SSA.
Exactly. You should only complete Form W-7 if the Social Security Administration, the SSA, formally notifies you that you're ineligible for an SSN. In fact, for many categories of applicants, if the SSA decides you're not eligible, you generally must get a formal letter of denial from them, and you have to attach that letter to your Form W-7 application.
A denial letter. Okay.
Yeah. This requirement stands whether or not you're attaching Form W-7 to a U.S. federal tax return. It's the IRS's way of making sure you've, exhausted the SSN route first.
What about individuals like students, professors, or researchers?
Yeah.
Do they always need that SSN denial letter? That seems like kind of an extra bureaucratic step.
That's a perceptive question, and there's a valuable nuance here, actually. For students, professors, and researchers, particularly those on F1, J1, or M1 visas, there's often a, let's say, streamlined path. If you are not going to be employed while in the U.S., meaning your whole reason for being here is study or research, not work, you can frequently attach a letter from your designated school official, or DSO,
The DSO.
or a responsible officer, the RO, instead of that SSN denial letter. Now, this letter has to explicitly state that you won't be seeking or securing employment and that your presence is solely for your academic program.
Right.
It's a critical detail that can significantly simplify the process for this specific academic community, saving them time and, frankly, hassle.
Got it. Now let's flip that. What happens if someone gets an ITN, uses it for taxes, and then later becomes eligible for and gets an SSN? Maybe a student gets work authorization later on.
Yeah, that's a very common scenario as people's immigration situations change over time. If you're issued an SSN after having previously used an ITIN, the rule is unambiguous. You must stop using your ITIN immediately. And you have to use your new SSN for all future tax filings.
All future ones.
All of them. This applies even if your newly issued SSN doesn't actually authorize employment, or maybe if your work authorization later expires. Once you have an SSN, it becomes your sole primary taxpayer identification number. It basically makes the ITIN obsolete for your personal use. The IRS system is designed to identify you by one unique number. Trying to use both or going back to an ITIN after getting an SSN will just lead to processing errors and significant delays.
Okay, so ITNs are strictly for those who cannot get an SSN, and it's just for federal tax purposes. Does that mean an ITN opens the door to all federal tax benefits and credits, or are there limitations we need to be aware of, especially thinking about those tax savings?
That's a crucial point for anyone aiming for, tax optimization. And the answer is no, and an ITIN does not unlock all federal tax benefits. And this is a really significant area for potential disappointment if you're not aware of the limitations up front. For instance, individuals filing tax returns using an ITIN are expressly not eligible for the Earned Income Credit, or EIC.
Ah, the EIC, that's a big one.
It's a substantial refundable credit designed to benefit low to moderate income workers. So its unavailability can have a really notable impact on many families. Furthermore, and this was a major policy shift, for tax years 2018 through 2025, a child with an ITIN generally cannot be claimed as a qualifying child for the child tax credit or the additional child tax credit.
Wow, okay, that's huge.
It's an enormous change that has significantly impacted tax benefits for families where dependents only have ITNs, especially those relying on these credits for, financial relief. So while an ITN allows you to meet your tax obligations and access certain benefits, it's definitely not a universal key to every single tax credit out there. Understanding these specific limitations is paramount for accurate financial planning.
That's a massive distinction that could really alter a family's entire tax strategy. So understanding these limits right from the start is absolutely critical. Now let's move on to the gateway document for this whole process. Form W-7. What's its primary purpose, and when would someone actually use it?
Okay, Form W-7. It's your direct application for an ITN. Its primary purpose, like you said, is applying for a new ITN. Generally, when you're doing this, you must include a U.S. federal tax return with your application. The only exceptions are some very specific scenarios we'll dig into a bit later, which allow you to apply for an ITN without filing a tax return at the same time.
But normally, tax return attached.
In the most common scenario, yeah, you essentially attach Form W-7 right to the front of your tax return. What happens then is the IRS will first assign the ITIN, and only then will they process your tax return using that newly assigned number. It's kind of a two-step internal process they manage.
And what if someone already has an ITN, but maybe it's been a while, or they just heard something about ITINs expiring? Is there a renewal process involved?
Yes, there certainly is, and it's a vital part of staying compliant. You only need to renew an existing ITN if it has expired and you plan to include it on a U.S. federal tax return. Why does renewal matter? Well, failure to renew an expired ITN can lead to really significant delays in processing your tax return.
Right, you don't want that.
Imagine expecting a refund and finding out your return is just stuck in limbo because an ITN on it has expired. It's incredibly frustrating and totally avoidable. The IRS will simply hold the return until the ITN is renewed.
So if my ITN is only being used by, say, my bank to report interest income on a Form 1099 INT, and I'm not actually filing a tax return myself,
Yeah,
I don't need to rush out and renew it, do I?
that's a smart clarification. Correct. If your ITN is solely used for those information returns filed by third parties, like banks reporting interest, investment firms reporting dividends, and you aren't currently required to file a federal tax return where that ITN would appear, then no, you don't need to renew it at that specific moment.
Okay.
However, here's the heads up. If you do eventually need to file a federal tax return, or maybe claim a tax benefit where that ITN is required, then renewal will become necessary. It's probably always best to be proactive and make sure your ITN is current if there's any chance you'll use it for filing your own return. The IRS system is designed to flag expired ITN on tax returns.
What are the expiration rules then? How would I even know if my ITN has expired or maybe is about to?
The rules are quite precise, actually. An ITN expires if it wasn't included on at least one U.S. federal tax return for the last 3 consecutive tax years. So
Right.
let's say you last filed a return for tax year 2020 and then didn't file in 2021, 2022, or 2023. Your ITN would expire on December 31st of 2023.
3 years of non-use on a return.
Exactly. 3 consecutive tax years. Additionally, ITNs that were assigned before 2013 and have never been renewed will also need renewal if you plan to use them again on a U.S. federal tax return. The IRS does send out notices to alert people, but honestly, it's a good idea to just track your own filing history. It's part of taking ownership of your tax compliance, you know?
Now that we have a solid grasp on what an ITN is, its limitations, and when you need to apply or renew, let's zero in on the who. Who exactly is eligible to get an ITN? What's the fundamental test? And maybe to put a face on this, let's think about Sophia, a hypothetical student from Spain here on an F1 visa. How would she figure out if she's eligible?
Fundamentally, anyone who isn't eligible for an SSN but must provide a taxpayer identification number for U.S. tax purposes, or maybe just to file a U.S. federal tax return, is eligible. This covers a really broad spectrum of individuals, from foreign students and professors like Sophia to foreign investors, and even dependents of U.S. citizens or residents. For Sophia, if she's getting a taxable scholarship and isn't working, she won't be eligible for an SSN, right? But she'll need an ITIN to report that income.
And Form W-7 itself kind of guides you through this, right? You have
Yeah.
to check a specific box saying why you need it. It's not just a free-for-all.
Exactly. Form W-7 forces you to check a specific box indicating your primary reason for submitting it. It's really crucial to pick the one that best explains your situation, even if maybe more than one seems to apply. Getting this right guides the necessary documentation you'll need to submit later.
Let's maybe walk through some of those common scenarios, because this is where the specifics really matter for people trying to get their application right the first time. Okay, let's start with Box B, non-resident alien filing a U.S. federal tax return. Who fits into this category and what's particularly important here?
Right, Box B. This category primarily covers individuals who are required to file a U.S. federal tax return to report U.S.-sourced income. This could be income that's effectively connected with a U.S. trade or business, like maybe consulting fees for work done in the U.S. by a non-resident, or it could even be income that's not effectively connected, like certain types of passive investment income. Or sometimes people just need to file to claim a refund of over-withheld tax.
Like a foreign investor selling stock.
Exactly. That's a great example. A foreign investor who sells U.S. stock might need an ITIM to report that gain. Now, a very important address requirement here for tax compliance. You must enter a complete foreign, non-U.S. address on line 3 of Form W-7. This helps establish your non-resident alien status for tax purposes. If you don't have a permanent foreign residence anymore, maybe you moved, use your most recent one. This tells the IRS you're not a U.S. resident for tax purposes, even if you might be physically here temporarily.
Okay, what about Box C? U.S. resident alien filing a U.S. federal tax return. How does someone become a U.S. resident alien for tax purposes without having an SSN? This sounds a bit like a tax paradox.
It can certainly feel that way. This is typically based on something the IRS calls the substantial presence test. Think of it as the IRS's way of figuring out if you've spent enough time physically in the U.S. to be considered a resident alien just for tax purposes, even if you're not a green card holder or a citizen. It's basically a formula. You count the days you've been in the U.S. over the current year and the 2 previous calendar years, with specific weighting given to the earlier years.
Okay, a calculation.
Yeah. If you meet this test, which generally means being here 31 days in the current year and 183 days over the 3-year period, using that weighted average, then regardless of your actual immigration status, the IRS treats you much like a U.S. citizen for tax filing. This means you're taxed on your worldwide income, not just your U.S.-sourced income. Big difference.
Worldwide income.
Right. So if you meet this test and need to file a tax return, but you're ineligible for an SSN maybe because you don't have work permission from USCIS that would qualify you for one, you would check this box, Box C. You'll also need to enter your specific date of entry into the U.S. on line 610 of the form. This distinction between non-resident alien and resident alien for tax purposes is profound. It completely changes how you're taxed and which firms you file, and the ITN is critical for the IRS to identify you correctly.
Now, here's where we get into some very tangible tax-saving strategies. Claiming tax treaty benefits. I see boxes A and F relate to this. Expert, how does an ITN become a direct enabler for significant tax savings through these treaties?
This is truly where an ITN becomes a direct pathway to potentially substantial tax optimization. Let's break it down. First, Box A, non-resident alien claiming tax treaty benefits. This is specifically for individuals who need an ITN just to claim tax treaty benefits, even if they aren't otherwise required to file a federal tax return in that year. See, a tax treaty is basically an agreement between the U.S. and another country. It's designed to prevent double taxation and clarify tax rules for residents of both countries. For you, this can mean a reduced tax rate or sometimes even a complete exemption on certain types of U.S.-sourced income.
So actual money saved.
Absolutely. Imagine you're a foreign author, maybe Sophia's friend Maria from Italy. She gets royalties from U.S. sales of her book. Or maybe Sophia's mentor, Dr. Kim, from South Korea, a visiting professor receiving a stipend. Without an ITN and correctly claiming treatment benefits, both Maria and Dr. Kim could face a flat 30% U.S. tax withholding right off the top of their income. Ouch.
30%, wow.
But by applying for an ICN under this exception, Box A, and correctly citing the specific treaty country and article, that withholding might drop to, say, 15%, 10%, maybe even 0%. That puts significantly more money in their pocket up front instead of waiting months, maybe years, for a refund. This is often a classic case of knowing your treaty rights to avoid overpaying the IRS from the very first dollar earned. When you check this Box A, you must also check Box H down below and specify the treaty country and article number, along with the relevant exception, usually Exception 1 or Exception 2, which we'll get to.
And for students, professors, or researchers claiming treaty benefits, like our hypothetical Sophia,
That would fall under Box F, non-resident alien student, professor, or researcher claiming tax treaty benefits. This applies if you're in the U.S. temporarily for education or research, and you're claiming treaty benefits, maybe for a reduced tax rate on a scholarship, a fellowship, or teaching income. For Sophia, if her scholarship from the U.S. university is partly taxable, a treaty between the U.S. and Spain might reduce or even eliminate that tax. Just like Box A, you'll also check Box H and indicate Exception 2, providing those all-important treaty details. It's essentially a specialized version of the treaty benefit claim tailored for the academic community, leading directly to tax savings on their U.S.-sourced income.
Okay, let's talk about dependents and spouses, because there was a major policy shift here relatively recently that dramatically changed how ITINs are issued for family members. My understanding is that simply being a dependent or spouse isn't enough anymore to get an ITIN. What's the new requirement, and how does this specifically connect to allowable tax benefits? This sounds like a core area for tax planning for families who have members without SSNs.
You've hit on one of the most critical points for family tax planning, absolutely. For tax years after December 31st, 2017, a huge change happened. Spouses and dependents are no longer eligible for an ITN solely for the purpose of claiming a personal exemption. Why? Because personal exemptions were eliminated after 2017 by the Tax Cuts and Jobs Act. And with them went the main reason many dependents historically got ITNs. Now, they must be claimed for an allowable tax benefit, or they have to be filing their own tax return.
An allowable tax benefit. Okay.
Exactly. This is absolutely crucial for tax planning because if your dependent or spouse needs an ITN, you have to make sure they qualify for one of these specific benefits just to even get the ITN issued. It really shifts the focus from simply identifying a person on a return to demonstrating a direct tax consequence or benefit related to them.
So what exactly are these allowable tax benefits that an ITN can enable? This is where the ITN translates directly into tax savings for a family, right? Let's really deep dive into these because this is where families can optimize their tax bill.
Absolutely. Understanding these benefits is paramount to using the ITN effectively for tax optimization and potentially reducing your family's overall tax liability. Let's walk through them. One of the most common scenarios is if you have a spouse filing a joint return. If one spouse has an SSN and the other needs an ITN so you can file jointly, that's an allowable benefit. Filing jointly can often result in a lower tax liability than filing separately for married couples, mainly thanks to more favorable tax brackets and higher standard deductions. For many couples, this is a straightforward path to tax savings.
Makes sense. What about head of household status?
Yeah.
Can an ITN for a dependent really help you qualify for that potentially lower tax rate?
Yes, it absolutely can, and this is a significant strategic point for many single parents or people supporting relatives. If the ITN applicant is your qualifying child or qualifying relative who lived with you for more than half the year, or even your parent in some cases, an ITN for that individual is required to claim the head of household (HOH) filing status. This isn't just about claiming a small credit, it's a fundamental shift in your filing status. The HOH status often comes with a lower tax rate and a higher standard deduction than filing as single. This can directly translate into saving hundreds or even thousands of dollars compared to filing as single. So getting that ITN for the qualifying dependent is essential to unlock this more advantageous filing status and optimize your tax bill.
And qualifying surviving spouse. Similar idea.
Similar idea, yes. If the ITN applicant is your child or stepchild who lived with you all year, an ITN can enable you to file as a qualifying surviving spouse, QSS. This status allows you to use the favorable joint return rates for 2 years after your spouse's death, providing a better tax position during what's obviously a difficult time. However, it's vital to note, and this is a recent clarification, an ITN will not be assigned or renewed for an HOH or QSS qualifying person if they are not also claimed as a dependent on an attached tax return with a separate, valid, allowable tax benefit check for them. So they need double duty, essentially.
Ah, okay. Good distinction. So it's not just about filing status. Are there specific tax credits that an ITN can help a family access, putting actual money back in their pocket?
Yes, several. And these are often overlooked but can be quite valuable, directly reducing the tax you owe or even giving you a refund. First, the American Opportunity Tax Credit, AOTC. For eligible students, if the student is your dependent and needs an ITN, that ITN allows you, the taxpayer, to claim them for this valuable educational credit. It can be worth up to $2,500 per eligible student per year. Huge help for families paying for college.
Definitely.
Then there's the Premium Tax Credit, PTC. This credit helps eligible individuals and families afford health insurance coverage bought through the health insurance marketplace, Obamacare. If a family member who needs the credit only has an ITN, getting that ITN is crucial for properly calculating and claiming that benefit to lower your monthly insurance premiums or get it back at tax time.
Healthcare costs, yeah.
Yeah.
Important.
Next, the Child and Dependent Care Credit, CDCC. This allows a credit for expenses paid for the care of a qualifying child or dependent so that you, the taxpayer, can work or look for work. Childcare, basically. What's interesting here is that even if your tax return ends up having no tax liability to be reduced by the credit, an ITN can still be submitted for this purpose. So even if it doesn't immediately put cash in your pocket, it recognizes the expense, which might be important for other tax calculations or state benefits.
And finally,
the Credit for Other Dependents, ODC. This is a $500 non-refundable credit for qualifying children or relatives, excluding your spouse who don't qualify for the main child tax credit. Maybe they're too old, or they aren't your child but live with you, like an elderly parent. This one is important because for a dependent to qualify you for the ODC, they must have a valid Social Security number or an ITA. And crucially, when you prepare your tax return, you must manually check the Credit for Other Dependents box next to their name on the tax return, Form 1040. Tax software might not do this automatically if no TIN is present initially, so you need to proactively ensure that box is checked for the ITN to be issued for this specific purpose. It's a small checkbox that makes a big difference in getting the ITN approved.
wow, okay, lots of potential benefits tied to getting that ITN. So for all these dependent and spouse categories that qualify for an IPN, what specific pieces of info do you need to provide on Form W-7 itself?
Right. On the W-7 form, you'll need to clearly state the relationship of the dependent to the U.S. citizen or resident alien taxpayer like parent, child, grandchild. Simple enough. And you'll need to provide the full name and either the SSN or ITIN of that U.S. citizen or resident alien taxpayer who is claiming them. There are also some specific helpful rules for dependents and spouses of U.S. military personnel. They can often submit notarized copies of documents if they're applying from overseas or an APO/FPO address, as long as they include a copy of the service member's military ID. This provides some welcome flexibility for military families stationed abroad who might have trouble getting certified copies.
Good to know. Moving back to Box F for non-resident alien students, professors, or researchers. Beyond just claiming tax treat benefits, what makes this category unique and what should someone like Sophia be ready to provide?
Right, Box F. This applies to individuals who are temporarily in the U.S. solely for education or research and are required to file a U.S. federal tax return, or maybe are just claiming an exception to filing. If you check this box, you'll need to provide very specific information on lines 6A, 6C, 6 and 6G of Form W-7. This includes your country of citizenship, your U.S. visa information, specifically the USCIS classification like F1, J1, the visa number itself and its expiration date, plus details about your identification documents, and critically information about your college, university, or company, including its city and state, and your expected length of stay.
Lots of specifics there.
Yeah. And a unique documentation aspect here is that you generally need to provide a passport with a valid U.S. visa. The only real exceptions are if you're from Canada, Mexico, or Bermuda, as citizens from those countries often don't require a visa for certain entries. Now, for F1, J1, or M1 visa holders who won't be employed, remember that letter from your designated school official, DSO, or responsible officer, IOO. That can substitute for an SSN denial letter as long as it clearly states you won't be securing employment and your presence is solely study-related. This is a huge convenience, saves a trip to the Social Security office.
And finally, box H, the other or catch-all category.
Mm.
When do people typically use this, and what are the crucial exceptions where a tax return isn't required with the W-7? Because normally you have to attach that tax return.
Right. Exactly. Box H is indeed the general purpose category for situations not covered by boxes A through G. When you check this box, you must describe your reason in specific detail. Don't just write other. It's often used when a third party, like a bank, an investment firm, or maybe even a gaming establishment, requires an ITN for their own information reporting or withholding purposes, even if you're not yet due to file a tax return yourself. And this is precisely where the exceptions to the tax return requirement come into play. They're really crucial for understanding when you can get an ITN more simply without needing to prepare a full tax return right away.
Okay, let's break down these exceptions because they seem key to understanding when you can get an ITN without that simultaneous tax return filing. Exception 1 sounds like it's mainly for passive income.
It is. Exception 1. Passive income, third-party withholding, or tax treaty benefits. This applies to individuals receiving income like partnership income, interest, annuities, rentals, royalties, or dividends that's subject to withholding by a third party or covered by a tax treaty. Think of someone with a U.S. investment property generating rental income, or maybe a foreign national receiving dividends from U.S. stock. Examples would be recipients of Form 142S or 1099 INT. To qualify under this exception, you'll generally need an original signed letter from the withholding agent like the bank or investment company on their official letterhead. This letter needs to verify that an ITN is required for distributions that are subject to IRS information reporting or withholding during the current tax year.
Okay, a letter from the bank, basically.
Basically, yeah. But here's a big caution. If you're otherwise required to file a U.S. federal tax return, you are generally not eligible for this exception. This exception is really for those whose ITN is needed primarily for reporting by someone else, not necessarily because they themselves have a tax liability that requires filing a full return at that moment.
Got it. What about exception 2, other income? Sounds broader.
Exception 2, other income. Yeah, this one is a bit broader. It applies if you're claiming the benefits of a U.S. income tax treaty for income like wages, salary, scholarships, fellowships, grants, or even gambling income. For example, a professional poker player from a treaty country might use this if their U.S. winnings are subject to treaty-reduced withholding. It also applies if you're receiving taxable scholarship, fellowship, or grant income, but not claiming a tax treaty benefit, which might be the case for Sophia if, say, the U.S. and Spain didn't have a relevant treaty covering scholarships.
And the paperwork.
Documentation for this can be pretty extensive, depending on the situation. It might include employment letters, scholarship award letters, Form W-8BN, that's the Certificate of Foreign Status, and for student scholars under an ES-FVP-approved institution, maybe a specific certification letter and copies of forms like DS 2019 or I-20. And remember, for those F1, J1, or M1 visa holders who won't be working, that DSRO letter can substitute for an SSN denial letter here too. Also, if you have significant gambling winnings and you're using a gaming official who happens to be an IRS I-10 acceptance agent to claim treaty benefits, you'd likely apply under this exception right through them, which simplifies the process at the casino itself. This exception is valuable because it allows for I-10 application without a full tax return, often directly facilitating reduced withholding through tax treaties. Big potential tax saver right there.
And mortgage interest. Is there really an exception for that, even if I'm not filing a return? Seems specific.
Yes, there is. Exception 3, mortgage interest third-party reporting. This applies if you have a U.S. home mortgage loan where the lender reports the interest you pay, typically on Form 1098. You might need an ITN for the lender to accurately report that interest to the IRS, even if you don't otherwise have a U.S. filing requirement. To qualify, you'd need to provide documentation showing evidence of the home mortgage loan, like a copy of the contract of sale for the property.
This is typically for foreign persons who own U.S. property and need an ITN just for the lender's reporting.
What about selling U.S. real estate? That often involves complex tax implications for foreign sellers, doesn't it? Absolutely, and that brings us to Exception 4, dispositions of U.S. real property interests third-party withholding. This applies to foreign persons involved in the sale of U.S. real property that's subject to withholding by the buyer under FIRPA, the Foreign Investment in Real Property Tax Act. AIRPA is basically designed to ensure foreign persons pay U.S. income tax on gains from selling U.S. real estate. When a foreign person sells U.S. property, the buyer is often required to withhold a chunk of the sale price, sometimes as high as 15%, and send it directly to the IRS.
15%.
Yeah, it can be substantial. The foreign seller then needs an ITN to file a U.S. tax return later to report the actual gain or loss and hopefully claim a refund if too much was withheld. Under this exception, you'd typically need to submit a completed Form 8288, A288A, or 8288B related to that withholding, along with maybe a copy of the real estate sales contract or a settlement statement, like a HUD-1 or closing disclosure. This is critical for dealing with the withholding obligations in these real estate transactions and eventually getting back any overpaid tax.
And finally, Exception 5.
That sounds pretty niche, based on the name. Treasury decision something?
It is indeed quite specialized. Exception 5, Treasury Decision TD 9363. This particular exception honestly won't apply to most individuals listening. It's mainly for non-U.S. individuals who work for certain foreign corporations that have U.S. tax filing obligations. Essentially, if that foreign corporation is now required to file certain U.S. tax forms electronically, and you, as their non-U.S. representative, are the one designated to handle that digital submission, you might need an ITN solely for that e-filing purpose. It typically requires an original signed letter from your employer on corporate letterhead stating the ITN is needed for this specific purpose and confirming you're the designated person. So as you can see, these exceptions cover a wide range of scenarios where an ITN is needed for reporting or treaty benefits, but a full federal tax return isn't necessarily due at the exact moment you apply. Okay, we've navigated the landscape of why and who needs an ITN, along with those really crucial exceptions. Now, let's get into the nitty-gritty. Actually filling out Form W-7, line by line. Because attention to detail here isn't just important, it sounds like it's absolutely non-negotiable for a successful application.
You couldn't be more right. The IRS emphasizes that meticulous accuracy is truly essential. A few general principles to keep in mind before we even start. Never, ever leave a section blank. If a section doesn't apply to you, you must enter NA. Don't just skip it. Secondly, consistency is absolutely paramount. The information you provide on the form, your name, your date of birth, country of citizenship, must perfectly align with your supporting documentation. Any discrepancy, even a minor one, can cause significant delays or even lead to an outright rejection of your application, sending you right back to square one.
And signatures. Who can actually sign Form W-7? Is it always the applicant?
Not always, no. The applicant themselves is generally required to sign. However, there are specific exceptions. If the applicant is a dependent under 18 years old, their parent or court-appointed guardian can sign for them. For dependents who are 18 or older, either the applicant themselves, a court-appointed guardian, or someone holding a valid Form 2848 power of attorney can sign. But here's a crucial point that often catches people off guard and leads to rejections. A spouse cannot sign for the other spouse unless a Form 2848 power of attorney is attached. It's not automatic just because you're married. Make sure you have the proper authorization if someone else is signing.
That's a vital piece of info. Okay, let's go line by line through the form. First, those application type boxes right at the top.
Right. You simply check one of two boxes. Clearly indicate if you're applying for a new ITN or renewing an existing one. If it's a renewal, you must also complete lines 6C and 6.5 down below, providing your previous ITN. This is critical to avoid processing delays, as it helps the IRS link your new application to your old record.
Line 1A, legal name. Sounds simple, but I imagine there are pitfalls here too, right?
You're perceptive. This is a really critical line. You must enter your legal name exactly as it appears on your identifying documents. This is how your ITN will be established within the IRS system. If you're renewing your ITN and your name has changed, say due to marriage or a legal name change, you must submit supporting documentation like a marriage certificate or a court order proving the change. If the name on your tax return or any future document doesn't precisely match the name under which your ITN was issued, it can significantly delay the processing of your tax return and create a lot of administrative headaches down the line. So consistency here is paramount. It's a non-negotiable data point. Line 1B is only needed if your name at birth was different from your current legal name on 1A.
Line 2, applicant's mailing address. This is where the IRS sends everything back, correct? So it must be accurate and reliable.
Precisely. This is the address the IRS will use to send your ITIN notification letter and, critically, return your original supporting documents if you mailed them. So ensure it's accurate, secure, and will be valid for at least a few months after you submit the application. And an important note, this address may not automatically update the IRS's main records for other purposes unless you actually include a U.S. federal tax return with your Form W-7. So if you're applying under an exception, no tax return attached, and your address has changed since your last interaction with the IRS, you might also need to file a separate Form 8822, change of address, to update their main system fully. Also, a little detail. Never use a private P.O. box, like from a mail service store. Only use a U.S. Postal Service P.O. box if home delivery isn't possible at your actual residence.
Line 3, foreign non-U.S. address. This seems particularly important for establishing that foreign status, especially for those non-resident aliens we talked about.
It is absolutely crucial for establishing your foreign status for tax purposes. You must enter your complete permanent or normal foreign residence address here, even if it happens to be the same as the mailing address on line 2. If you no longer have a permanent foreign residence because you've relocated to the U.S., you should enter your most recent foreign residence country. And here's a significant warning that can lead to rejection. Do not use a P.O. box or an in-care of address on line 2 if you only list a country on line 3 without a full street address. That lack of a concrete foreign residence address can trigger a rejection. Also, remember, if you're claiming a tax treaty benefit, the country you list here on line 3 must match the treaty country you're claiming benefits from. This confirms your residency for treaty purposes.
Line 4, date of birth. Straightforward.
Simple enough, but double-check the format. Month, day, year. MMDDYYYY, not the day-month-year format used in many other countries. A small error here can lead to delays if it doesn't match your documents.
Lines 6A through 6G cover other information, starting with 6A, countries of citizenship.
Right. Enter the full country name, no abbreviations. Spell it out completely, like United Kingdom, not UK. For 6B, foreign tax ID number, if your country of residence for tax purposes issues one, like a Canadian Social Insurance Number, SIN, or maybe a European Tax Identification Number, TIN, you should definitely enter it here. This helps the IRS in potential information exchanges with your home country's tax authority.
Line 6C is for U.S. visa information. What goes here?
Here, you'll enter your USCIS classification, for instance, F1, J1, H1B, B2, whatever applies. Then provide the visa number itself, which is usually the red number printed on your visa sticker in your passport, and its expiration date. Again, an MMDDYYYY format. If you have related documents like an I-20 or DS 2019, common for students and exchange visitors, or an I-94 arrival departure record, you should attach copies of those to your Form W-7 as supporting documentation. This provides essential context for why you're in the U.S.
Line 6B is all about the identification documents you're actually submitting with the form. What should people be especially careful about here?
This is truly critical for verification, as it directly links your identity on the form to the physical documents you're providing. You check the box for the type of document you're submitting, passport, visa, driver's license, etc. Then you enter the issuer, for example, Spain, California DMV, U.S. depth of state, the ID number from the document, the expiration date, and most importantly, the date of entry into the United States. This date of entry is extremely important for helping determine your tax residency status. If you've never actually entered the U.S., maybe you're applying for an ITN for passive investment income from overseas, you literally write "never entered the United States" on this line.
Okay.
And a common pitfall here, a passport without a U.S. entry date stamp generally doesn't prove U.S. residency on its own, so it won't be considered a standalone document for certain dependents claiming benefits that require U.S. residency. If you're a dependent and your passport lacks an entry date, you'll likely need additional proof of U.S. residency, which we'll cover.
And what if I've had an ITN or maybe something called an IRSN before? Do I need to report that?
Yes, absolutely. That's line 6E and 6F, and it's mandatory if it applies. If you've ever received an ITON or an Internal Revenue Service number or IRSN, which is a temporary 9-digit number the IRS might have issued in the past if you filed a return without a proper TIN, you must check yes on 6A. Then on 6F, you provide those previous numbers and the name under which they were issued. Providing this information prevents significant delays, especially if you're renewing. If you're renewing your ITON, failing to provide the previous ITON on line 6F is one of the most common reasons for processing setbacks. The IRS needs to connect the dots in their records.
Finally, line 6G, college, university, or company info.
Right. This section is mandatory if you checked Reason Up student, professor, or researcher, or if you indicated you're temporarily in the U.S. for business related to your ITN request. You'll enter the name of the college, university, or company, its city and state, and your expected length of stay in the United States, 2 years, until June 2026. Program completion. This provides necessary context for your reason for needing the ITN and helps the IRS understand your non-immigrant status and purpose here.
Okay, we've just navigated the detailed landscape of Form W-7 itself, but filling out the form is, as you said, only half the battle. Now, we need to talk about what you need to send with it, because supporting documentation is where an overwhelming number of applications get tripped up, right? Expert, tell us, what are the absolute non-negotiables when it comes to proving your identity and foreign status?
This is truly the backbone of your entire application, and attention to detail here just can't be overstated. You must submit documentation that establishes both your identity and your foreign status. This means providing proof of who you are and simultaneously proving that you are not a U.S. citizen or permanent resident. Think of it as satisfying two distinct, mandatory requirements with the papers you submit.
And for dependents, there's often that extra layer of proof needed, right? It's not always just identity and foreign status for them.
Precisely. For applicants being claimed as dependents on a tax return, proof of U.S. residency is generally required in addition to their identity and foreign status documents. Now, there are specific exceptions, like for dependents of U.S. military personnel stationed overseas, or certain Canadian or Mexican dependents if they're being claimed for an allowable tax benefit other than the credit for other dependents of D.C. But for most other dependents, providing solid evidence of their actual U.S. residency is a crucial step to proving their eligibility for the claimed tax benefit that requires them to live in the U.S.
And it's not just any copy of a document, is it? You need originals, or what the IRS calls certified copies. What exactly does certified by the issuing agency mean? Because this is a huge point of confusion and anxiety for many people.
This is perhaps the most critical aspect of documentation, and yes, it's very often misunderstood. You must submit original documents or copies certified by the issuing agency. What does that actually mean? A certified copy is one that the original issuing agency, like, say, a foreign government's passport office or a state's vital records office for a birth certificate, provides and formally certifies as an exact copy of the original document they hold. It must contain an official stamp, seal, or other formal certification from that specific agency.
So a regular photocopy, even if I take it to a notary public, that won't work.
Generally, no. A notarized copy is usually not sufficient for IRS ITIN purposes. The certification has to come from the agency that issued the document originally. The only real exception to this rule is for those military personnel overseas we mentioned, who can sometimes use notarized copies under specific conditions. For others, it's often possible to request certified copies from your home country's embassy or consulate here in the U.S., or perhaps from U.S. embassies or consulates abroad if you're outside the U.S. Those services and fees can vary significantly. You always need to confirm with the specific agency or consulate.
And these original documents, like a passport, will they actually be returned? I imagine people would be incredibly hesitant, even anxious, to mail off something that valuable.
That's a very valid concern, and it's a primary source of anxiety for applicants, absolutely. Rest assured, your original documents will be returned to the mailing address you put on your Form W-7. The IRS generally returns them within about 60 days of receiving and processing your application. You don't need to provide a return envelope yourself. However, you are permitted to include a prepaid express mail or courier envelope like from FedEx or UPS if you want faster, more secure return of valuable documents like passports. The IRS will use that prepaid mailer to send them back.
That's good to know.
And if your documents aren't returned within, say, 60 to 90 days, you can call the IRS ITIN unit for a status update. But honestly, if you anticipate needing your documents back quickly, say within that 60-day window, applying in person at a designated IRS Taxpayer Assistance Center, TAC, or through an IRS Certifying Acceptance Agent, CAA, is highly advisable. They can often verify and return documents to you immediately, which saves immense stress.
Do the documents need to be current? What if my foreign ID expired last year? Can I still use it?
No, this is another critical filter. All documents must be current and not expired when you submit your application. If they have an expiration date, it must be valid. The only exception to this rule is a civil birth certificate. Because birth certificates don't have expiration dates, they're considered current at all times. Additionally, at least one document you submit must contain your photograph, unless you're applying for a dependent who is under age 14, or under 18 if they are a student. Also, if your documents are in a language other than English, be prepared. A certified English translation of those documents may be required later if the IRS cannot process them. It's probably better to have one ready just in case.
Okay, but let's talk specific types of documents. What's considered the gold standard, the easiest one to use, and what other documents are accepted if you don't have that?
The passport is unequivocally considered the gold standard by the IRS. It's the only standalone document that, by itself, establishes both your identity and your foreign status. This means if you submit a valid, unexpired passport, you generally don't need any other identity or foreign status documents. Makes life much simpler.
Unless.
Unless, as we mentioned, it's for certain dependents and the passport doesn't have a U.S. entry date stamp. In that specific case, it might not be standalone for proving U.S. residency needed for some benefits. So if you're submitting a passport, make sure to include copies of any relevant U.S. visa pages if a visa is required for your Form W-7 application reason, like F1, J1, M1 visas.
Okay, so passport is best. But if you don't submit a passport,
If you don't submit a passport, you must submit at least 2 other types of accepted documents from the IRS's approved list. And remember, at least one of these documents must contain your photograph. Other commonly accepted documents include things like U.S. citizenship and immigration services, USCIS photo identification, like an employment authorization document, or even a green card. Though if you have a green card, you almost certainly qualify for an SSN and shouldn't be applying for an ITIN. A valid U.S. visa issued by the U.S. Department of State, the visa itself, a U.S. driver's license or U.S. military identification card, a foreign driver's license or foreign military identification card, a national identification card, these are very common abroad, but it must contain your name, photograph, current address, date of birth, and an expiration date to be accepted by the IRS, a U.S. state identification card, a foreign voter's registration card, and a civil birth certificate. This can establish foreign status if it's a foreign birth certificate, but it does not prove identity on its own because it usually lacks a photo and doesn't prove U.S. residency. So you'd need another document with it.
what about specific documents for very young children or students, like maybe Sophia's younger cousin who might be claimed as a dependent? Are there special rules there?
Yes, for dependents, there are special considerations, particularly for age-specific documents that help establish not just their identity, but crucially, their U.S. residency if that's required for the tax benefit being claimed. Medical records are accepted only for dependents under age 6. These must be an official document, like a shot or immunization record, or maybe a dated letter on official letterhead from a medical provider that is signed. It must include the applicant's name, their address, importantly, a U.S. address if proof of U.S. residency is required, the date of the medical care, which must be within the last 12 months, and the doctor's name and the medical facility's U.S. address. It's really designed to confirm their recent presence and care within the U.S. healthcare system.
And school records.
School records are accepted only for dependents under age 24 if they are a student. This could be an official document like a report card, a transcript, or perhaps a dated letter from a school official on official letterhead signed. It needs to include the applicant's name and address, again, a U.S. address if residency proof is needed, a record of attendance or coursework with grades, the school's name and address, also a U.S. address if residency proof is needed, and the school term dates must end no more than 12 months from the W-7 application date. This verifies their current or very recent enrollment in a U.S. educational institution.
And this proof of U.S. residency for dependents is an additional layer for some applicants, isn't it? Even if you have identity and foreign status documents like a passport, you might still need this extra proof.
Absolutely. It's critical for certain dependents, and it's a really common area for rejections if it's overlooked. If the dependent's passport doesn't have a date of entry into the United States stamped in it, or if the dependent doesn't fall into those narrow military or Canada-Mexico exceptions we mentioned, they generally need to provide additional proof of U.S. residency. This shows they actually live in the U.S. and are part of the household claiming the benefit.
So what kind of documents work for that?
It depends on their age. For dependents under 6, acceptable proof of U.S. residency could be U.S. medical records, as described, U.S. school records, if applicable, a U.S. state identification card, or a U.S. visa showing an entry date. For those aged 6 but under 18, it could be U.S. school records, as described, a U.S. state identification card, a U.S. driver's license, or a U.S. visa showing an entry date. And for those 18 or older, in addition to the state ID, driver's license, or visa, acceptable proof could include a U.S. bank statement, a U.S. rental statement or lease agreement, or a U.S. utility bill from a U.S. property. All of these must clearly list the applicant's name and their U.S. address. Remember, this U.S. residency proof is in addition to the identity and foreign status documents, specifically when a passport without an entry date is used, or for benefits requiring residency. It demonstrates they truly are part of a U.S. household.
Any final practical tips on ensuring documentation quality before sending off those precious, maybe original papers?
Yes, always assess the quality and legibility of your documents before you send them. Documents that are unclear, blurry, torn, or have any significant blemishes are highly likely to be considered invalid by the IRS reviewers. Imagine trying to verify a worn-out passport photo or a smudged birth certificate. They just won't accept it. Now, while original physical documents are generally preferred, the IRS does say that if you received something like a bank statement, utility bill, or rental statement electronically and then printed it, that printout may be considered original for submission purposes. And here's a pro tip. The IRS provides a specific medical school records checklist right in the Form W-7 instructions. I highly recommend using that checklist rigorously to ensure every single required detail for those types of documents is present and accurate before submitting. It's really your best defense against unnecessary processing delays. Check every box.
We've covered the nuances of the form itself, the very detailed requirements for supporting documents, and even the specific strategic tax benefits an ITN can unlock. Now, let's bring it all together. The actual application process. How, when, and where do you submit everything to the IRS to get that ITN?
Excellent. Assembling your application package correctly and sending it to the right place at the right time is the final crucial step to a successful application. So many people get the forms right, but then stumble at the submission stage. First, you'll obviously need your completed Form W-7. Make absolutely sure it's filled out accurately, signed correctly by the right person, and all those NAs are in place where needed. You can find a fillable PDF online, complete it, then print it and sign it. Quick tip. If you prefer to receive correspondence from the IRS in Spanish, you can choose to submit Form W-7SP instead.
Okay, W-7 done. What's next?
Second, and this is absolutely critical in most cases, your original U.S. federal tax returns. Remember, unless one of those specific exceptions we discussed earlier applies, like for passive income reporting or certain treaty benefits without a current filing requirement, your Form W-7 must be physically attached to the very front of your tax returns for which the ITN is needed. If you're applying for multiple ITNs at once, say for both parents filing jointly, and maybe a dependent child, attach all the Forms W-7 to the same single tax return.
All together on one return.
Exactly. And this is a very important detail often missed.
Sure.
You must leave the Social Security number SSN area blank on the tax return itself for each person who is applying for an ITN with that return. Don't write applied for or anything else, just leave it blank. The IRS's internal process is to assign the ITN first, based on the attached W-7, and then they will process your return using that newly assigned number. They'll fill in that blank space internally.
That's a clever way to link the ITN application directly to the tax return itself. And third, of course, the supporting documentation we just spent so much time discussing.
Precisely. Your required supporting documentation, those original documents or certified copies we detailed earlier, must be included in the package. Double-check, triple-check that the information on these documents, name, DOD, citizenship, is perfectly consistent with what you've put on Form W-7. Any mismatch is almost guaranteed to cause your application to be rejected or delayed.
When should someone actually apply? Is there a specific window, or can you just do it whenever you feel like it?
Timing is absolutely key, and it can definitely affect your eligibility for certain tax benefits, especially refundable credits. For first-time ITN applications that require a tax return, you should submit the Form W-7 attached to that tax return on or before the return's due date, usually April 15th or October 15th if you file an extension. If you fail to file your tax return with complete Form W-7 and all the required documentation by that deadline, it can result in the denial of certain refundable credits, like the American Opportunity Tax Credit, even if you otherwise qualify for the credit itself. This is a common and costly pitfall.
So don't delay.
Definitely not. The golden rule here is Do not file your tax return without the necessary Form W-7 and supporting documents if you need an ITIN to process that return correctly. Wait until you have the W-7 package ready and send it all together. Now, if you meet one of those specific exceptions that don't require a tax return attached, you can submit Form W-7 pretty much any time during the year when the need arises.
What about e-filing? Can I e-file my tax return once I get my ITN? It's typically so much faster.
Ah, this is a significant limitation you really need to be aware of. You cannot electronically e-file, a tax return using an ITN in the same calendar year the ITN is assigned. This means if you apply for and receive an ITN sometime this year, 2025, you won't be able to e-file any tax return using that ITN, not the current year's return, not prior year returns, until the next calendar year, starting January 1st, 2026. You can, however, submit multiple years' worth of paper returns together with one Form W-7 application. For instance, if you need to file for 2023 and 2024, you can prepare both paper returns, attach one W-7 package, and mail them all in together. But electronic filing for that ITN will have to wait until the following year.
Good to know. Plan for paper filing the first year. And for renewing an ITN, when should that happen?
If you're renewing an existing ITN, you must submit your Form W-7 renewal application with your U.S. federal tax return. Again, for spouses and dependents renewing an ITN, they must be listed on an attached return with the applicable allowable tax benefit check, just like with an initial application. If you don't renew an expired ITN and try to file a tax return using it, expect significant delays in processing that return. The IRS computer simply won't process a return with an expired ITN listed on it. It gets flagged immediately.
So once everything is assembled, the W-7, the tax return if needed, the precious documents, where do you actually send this package? Do you just drop it in any old IRS mailbox, or is there a specific special destination?
No, absolutely not. Just any address. This is a very common mistake that can lead to significant delays and even the potential loss of your application package in the IRS maze. There are multiple avenues, but you absolutely must use the correct specific address. 1. By mail. The specific dedicated P.O. Box address just for ITIN applications is Internal Revenue Service, ITIN Operation, P.O. Box 149342, Austin, TX 787149342. And this is a crucial warning. Do not use the general mailing address you might find in your regular tax return instructions for filing Form 1040. Your tax return, when submitted as part of your ITIN application package, gets processed at this specific ITIN operation in Austin. Sending it to the wrong IRS processing center can mean months of delays while it hopefully gets rerouted.
Okay, Austin P.O. Box for regular mail. What if you want to use a private delivery service like FedEx, UPS, or DHL? For tracking purposes, that feels much safer, especially with original documents.
You're absolutely right. That's often a preferred method for peace of mind. For private delivery services, you use a different physical street address. Internal Revenue Service, ITN Operation, Mail Stop 6090 AUSC 3651S, Interregional HY35, Austin, TX787410000. These services offer the invaluable advantage of providing proof of mailing date and detailed tracking capabilities, which can give you immense peace of mind when sending valuable original documents. I always recommend using a service with tracking and maybe even insurance if you're mailing originals.
What's the absolute best option if you're really worried sick about mailing original documents like your passport, maybe need it back fairly quickly?
If you're genuinely concerned about mailing originals, and many people are applying in person at designated IRS Taxpayer Assistance Centers, TTACs, is your absolute best bet. These specific techs, and it's really crucial to call ahead and confirm if your local tech is designated for this ITN service, can verify your original documentation and certified copies right there on the spot. This typically includes passports, national ID cards, and birth certificates for dependents. They will review the documents, certify copies for the IRS file, and then return your original documents to you immediately. This means you don't have to mail your valuable originals at all. Huge relief for many.
Sounds ideal. How do you do that?
Service at tax is strictly by appointment only, so you must call 844-545-5640 to schedule one. Be aware, though, that not all tax offer this document verification service. Those that don't will simply accept your package and mail your documents on to the Austin ITN operation for you, which kind of defeats the purpose of the in-person visit if your goal was immediate document return. So confirm they do verification when you call.
And finally, there are these acceptance agents and certifying acceptance agents. What role do they play? Can they help streamline this process?
Yes, they can be very helpful. These are IRS authorized third parties who can significantly assist you and often simplify the process, especially if you find it daunting. An acceptance agent, AA, is authorized by the IRS to help you complete and file Form WT7 correctly. However, an AA will still need to forward your original documentation or certified copies onto the IRS in Austin for processing for all applicants. They act as a helpful intermediary and reviewer. A certifying acceptance agent, CAA, however, offers an even greater convenience and is often the preferred choice for many who can access one. A CAA can verify your original documents and certified copies from the issuing agency for primary and secondary applicants and their dependents. For dependents specifically, they can verify passports and birth certificates this way, though usually not foreign military IDs. Importantly, CAAs return your original documents to you immediately after reviewing their authenticity and making certified copies to submit to the IRS. This is another excellent option for keeping your original documents safe with you, minimizing the risk of loss or mail delays. You can find lists of AAs and CAAs on the IRS website. Interestingly, you might find some gaming officials at casinos are also CAAs, specifically for those needing ITNs due to gambling income.
Okay, lots of options for applying. Once everything is submitted, how long does it typically take to hear back? The waiting game can be agonizing, I imagine.
It definitely can be. The IRS generally advises allowing about 7 weeks for them to notify you of your ITN application status under normal conditions. However, this time frame can extend significantly up to 9 to 11 weeks if you submit the application during peak tax filing season, which is usually from mid-January to the end of April each year, or if you're filing from overseas. If you haven't received your ITN or any other correspondence from the IRS by the end of that estimated time frame, say 11 weeks just to be safe, you can call the IRS ITN unit directly at 1-800-829-1040 for a status update. Patience is definitely key, but so is knowing when it's appropriate to follow up.
That's an incredible amount of crucial detail, expert. I really think this will help our listeners avoid those frustrating pitfalls and confidently navigate this often confusing but clearly very important process. So today we've truly taken a deep dive into the individual taxpayer identification number, meticulously peeling back the layers of Form W7 and its pretty comprehensive instructions. We've seen that an ITNN is far more than just a number. It's a crucial component for non-U.S. citizens and residents to fulfill their U.S. federal tax obligations and, critically, to access specific allowable tax benefits, like certain credits or those advantageous filing statuses that can tangibly reduce your tax bill.
The process, while definitely detailed, is manageable when you approach it systematically. Understanding those key distinctions, like when an SSN is required versus an ITN, or which tax credits are and aren't available with an ITN, isn't just about compliance. It's really paramount for accurate filing, and perhaps most importantly, for strategic tax planning and optimization, finding those ways to potentially lower your tax liability legally.
Reinforcing this, understanding the nuances of ITNs can save you immense time, prevent those frustrating delays in tax return processing, and really ensure you can claim every single benefit you're actually eligible for. For families especially, understanding those allowable tax benefits, like qualifying for head of household or claiming the credit for other dependents, can really transform your filing status and significantly impact your financial well-being. It's truly about being informed and prepared, enabling you to navigate the complexities of the U.S. tax system with confidence rather than, fear or trepidation.
Yeah, absolutely. The ITN serves as a vital bridge, really, connecting individuals to the U.S. tax system who might otherwise be unable to comply with their tax obligations or access benefits they're entitled to. It allows for a structured approach to tax compliance, and as we've explored today, it really unlocks specific tax efficiencies and potential cost savings that might otherwise just be missed entirely if you didn't know about them.
So, as you, our listener, consider your own situation, or perhaps that of someone you know, what piece of this intricate puzzle feels most important for you to get right? Is it making absolutely sure your dependent qualifies you for that head of household status to lower your overall tax? Or maybe accurately claiming those crucial tax treaty benefits to avoid overwithholding? And how might understanding these details empower you to navigate the tax landscape with greater confidence, potentially unlocking those allowable tax benefits we discussed and putting more money back into your pocket? It's a complex system, no doubt, but with the right information, it doesn't have to be overwhelming. You've definitely got this.